Hello everyone, I hope you're all doing fantastic. My name is Marcello Kolax, I am the Managing Director at Clever Markets, and you are watching the Energy Outlook for the week starting 20th of February 2025. Before we jump into the charts, here just a quick announcement. I will be launching the next Clever Markets Technical Analysis Academy on the 17th of February. It is 4 weeks of intense technical analysis training, and you will learn everything you need to know in order to be a more effective technical energy trader. Whether or not you are experienced with TA or you're mostly relying on fundamentals, I will help you to identify trends earlier, plan trades better, and manage risk more effectively. I will help you to identify price targets, help you to squeeze more value out of your existing fundamental models. So no matter if you're just getting started, if you're intermediate or already a little bit advanced, I will give you all the tools and tell you how to put them together in order to make better trading decisions. So go to clevermarkets.com and read more about the onboarding criteria, how to get started, and if you don't know where to, if it is the right thing for you in the first place, then on LinkedIn, just send me a DM. Once again, my name is Marcello Kolax. I'm the only one on LinkedIn, so you'll find me very easily. What you're watching here right now is the free version of the weekly market video, so a much more in-depth video covering all markets in great detail, plus daily access to me, all of that, daily market analytics on a dashboard. That is more reserved for my Clever Markets remote TA desk clients, so you're getting a taster of it. If that interests you, also go to clevermarkets.com. So without further hesitation, let's move into the markets. As always, we are starting with a disclaimer. What you're seeing here is not trading advice, it's just my humble opinions and definitely not an invitation to trading. So I every week ask my energy markets network on where they think the market is most likely to go in the next week. So there's a poll on LinkedIn, and I do get around 200 responses every time. And we can see here that the sentiment has moved from bullish dominance towards bearish dominance from last week to this week. So this is significant because it is aligned with what the charts are showing us. Yes, last Friday was a little bit of a disappointment for the bears, but overall, this week there's a good chance for the market to push lower. Why is this important? Well, if most of the market is aligned with a bearish outlook, that means that the market could decline more gradually, it's more sustainable, and a more like doable pace essentially. If, however, we would, in an unlikely scenario, if we really would push significantly higher out of a sudden, then a lot of traders would be very wrong. So that would mean that they would have to close some of their short positions, which would then fuel an initial uptick. Where those levels are, those critical levels, we'll talk about in just a second. Okay, so also very interesting is where the markets currently are. So you can see on the gas markets, most of them are neutral right now, and that is simply because we are in a corrective down move to the underlying uptrend. What that means will we see in a second. Here I have switched from bearish to neutral today, but there's a good chance for the hourly charts to turn bearish again to continue their intraday downtrend. Now it's time for us to have a look at the charts, and I'll make myself a little bit smaller here as well. I want to pull your attention towards the TTF and NBP front month, the TTF and NBP front season, as well as German power and also EU ACE. So let's move me out of the way. There you go. Okay, so an interesting thing is they're all moving in exactly the same way, the gas markets. We have pushed lower, we are forming a lower peak, which is indicative of the market eventually pulling lower. On the NBP front season, we even made a double top pattern, which is usually in line with more losses as soon as we start breaking below 106.91, then you get a real bearish signal. So what I want to see now is, for most markets, I want to see a push below the most recent trough here in order to really pull more bears into the market. As long as we are working through these corrective moves, I want to say that the daily charts are neutral. Doesn't mean we can't act on the down leg, so that is best traded on the hourly chart, of course. So on the EUAs, we see that last week we did have a series of bearish reversal candles, or potential reversal candles, but the market pushed higher and higher and higher. So this week we are starting out once again with a potential bearish setup here, with an inverted, no, with a shooting star. Not quite a shooting star, but the sentiment remains the same, which should lead to more losses. So what is the pattern showing us essentially? It's showing us that the bulls on Friday tried to push higher. They made some good progress, but overall they failed to maintain their bullish stance, and the market closed lower again. For a real shooting star, what we want to see is we want to see that this wick here is twice as long as the body. Didn't quite happen, but overall the sentiment remains the same, right? Brent is a little bit in a consolidation phase. There is a chance for the market to correct lower, but once again, I want to see a clear break below 79.62 or somewhere in that area, or a clear break above 82.63 in order to make sure that we are not missing out on this corrective down leg, yeah, or this up leg. Alright, other than that, API2 is forming a bullish reversal pattern. It's not quite an inverted head and shoulders pattern, but you can see here, like we make lows and a lower low, okay, but now all of a sudden we are making higher highs and higher lows, so this is indicative of the market simply being bullish. Henry Hub, I feel this is very difficult. Like zooming out, we are still within an uptrend, that is undisputed, but zooming in, this here is tricky. So last week was very, very dangerous, and trading opportunities are also very, very limited, even on the intraday hourly charts. Now let's have a look at the JKM. Here there's a chance for the market to push lower significantly in the next coming days, and we are working with Fibonacci retracements. What that looks like in detail is explained for my Clever Markets clients on the dashboard. For everyone else watching this for free, I'll just quickly walk you through the TTF Front Month, to just give you a little bit more detail, and you know that most things apply to all the other markets as well. So on the TTF Front Month weekly chart, we are bullish without hesitation. So as long as we are within this ascending channel, we are simply bullish. Right now we are correcting lower, but how low can it go and where does the market go from here? That is best assessed on the lower level charts. So here once again on the daily chart, we are within the ascending channel. Okay, so that is bullish, but zooming in, there you go. And what we are making now is, so first of all, some people could see this as a double top, absolutely. Right now we are pushing lower, so we are making lower peaks and potentially lower troughs as soon as we move below 43.17. It would make sense for the market to push a little bit sideways at the start of the session. At the start of the week, but eventually there's a good chance for this whole thing to resolve lower, maybe first to 43.17, and if we were to push below that, we could test the channel support. But what is happening on the hourly chart? Because the hourly chart is giving us more detailed signals, essentially, and on the hourly chart we are working with a triangle, and symmetrical triangles, they don't have an inherent breakout direction and could really go either way. And zooming out, we see that this symmetrical triangle is forming near the upper end of an uptrend. Can you see uptrend, uptrend, uptrend? Now the market is moving into an increasingly tighter range. So this kind of indicates that the market is more ready to push lower, having reached a peak here. So now we are very much zoomed in, and this morning I keep an eye on 45.88 and 47.40. If we push above it, less likely the bulls would retain control of the market, or would regain control of the market intraday, but on the daily chart it just means we are maybe pushing a little bit higher. It wouldn't automatically resolve this range that we are working with here. So however, if the hourly chart pushes below 45.88, which is this support area here, and then we could very easily make it towards the trough here. We could very easily make it to the triangle support here near 45. If we push below that, then on the daily chart we would really be dealing with a deeper downside correction. So can you see how it all slots together? The markets move, or we get our early signals bottom up, but the markets are analyzed top down, right? We always want to trade with the main trend. So we are looking for buying opportunities in an uptrend and for selling opportunities in a downtrend. But it is the lower level charts that give us the earliest indication of what will happen next. So the market is poised to move lower overall. While we are within this triangle on the hourly chart, I would not pay much attention to trend and momentum tools because they tend to flatline or give false signals in increasingly tighter markets. So here I'm just really looking at what the price is actually doing. Ultimately, on the daily chart, I see that the stochastic has topped out quite some time ago, and we're also seeing that the momentum isn't there anymore, and also the trend tools have flatlined. So don't use trend momentum tools. I do pay attention to the stochastic, which is right now not giving me a clear trading signal, but it is pushing lower quite a bit. I mean, it did give a clear trading signal last week, or was it 2 weeks ago? Yeah, a couple of weeks ago at the start of January when we topped out here. So that is all for our free technical analysis outlook for the TTF. If you are inclined to learn more, if you're ready to get your technical analysis game to the next level, if you no longer want to be afraid of the market volatility, if you want to start every day with a clear plan, then I do encourage you to go to clevermarkets.com and have a look at the TA Academy. It starts on the 17th of February 2025. If you don't know where to go from here, no problem, just talk to me. So my name is Marcello Kolax. You will find me on LinkedIn, and we just set up a meeting and quickly talk through if technical analysis is the right thing for you. That is all for me. See you around and have a good start into the week. Bye bye.